Hey everybody, today we're going to be doing another dividend analysis and we're going to be looking at another telecom, in this case Verizon or VZ. We can start by taking a peek at the yield, which we can see is sitting comfortably at 4.5%, which is generally a pretty good dividend, especially for such a large established company. 4.5% is pretty good. We can start by taking a look at the history here. And going back to 2013, we can see that Verizon has been increasing their dividend every year up to just under 63 cents a share from 51.5 cents. So a little bit more than 1 cent a year, but not by much. So not a ton of dividend growth, but the growth is there. Next, let's go over to our cash flow statement and look at our cash flow to see if it's increasing. And as we can see, over the last 5 years, we've gone from $5.5 billion up to $23.5 billion. So multiple hundreds of percent increase here. Specifically, we had two huge jumps from 8 billion to over 17, and then we went from almost 19 to 23.5. So very good there. Next, let's take a peek at our payout ratio of cash flow. Last year, Verizon paid just under $10.5 billion in dividends. So let's see what that's going to come out to for us. And that free cash flow payout ratio is going to be right around 44-45%. So under our ideal payout ratio of 50%, very nice there. That means that if their cash flow does take a slight to moderate hit, that dividend is going to be secure. Next, let's jump over to our income. We'll go down to net income and we will check to see we are at 17.8 billion. So again, let's divide 10.5 billion by 17.8 and we get 59%. Not in our ideal range, but definitely under our acceptable range of 75%. So if there's a slight hit of income, let's say we go from this 18 billion down to, 17 or 16 billion, we're not going to be in a lot of trouble there. That's not going to break our dividend at all. So where is Verizon getting this income and this cash flow from? Like most telecoms, its primary source of income is going to be its wireless section for Verizon. That's going to be voice and data, which makes up about 3/4 of their business. The other quarter is their wired data, which is, landline stuff, voice data, video, things like Verizon Fios, things of that nature. It's good to remember that Verizon is the second largest telecom by subscribers, just after AT&T. And since we looked at debt for AT&T, let's do the same for Verizon to see if they're in the same kind of debt trouble. We'll start by looking at our currents, and we are at current assets last year of 52 billion over current liabilities of 40 billion. So plenty of cash on hand to pay off those liabilities. This isn't exactly rare for the telecom industry, but it's also not common. A lot of telecoms tend to have more debts outstanding currently than there is cash on hand. So this is very nice to see. If we check our totals, we can see our total current assets are at 316 billion to 247. So again, plenty of cash to pay off our total liabilities. One nice thing we see here is that their current assets grew by almost 100% in 5 years, while their current liabilities only grew by about 30%. So they are accruing more assets than they are liabilities. That's very good to see. A lot of people have been comparing Verizon to AT&T, saying that they're in the same boat. I really don't see that as the case. Verizon tends to do better with their debt, whereas AT&T is underwater. Verizon actually made money last year, whereas AT&T lost it. The one issue that we do have is that they're going to be raising $25 billion in new bond debt this month to help pay the FCC for some of their contracts for their 5G spectrum. So we're going to be adding about $25 billion to our total liabilities. So that is going to increase our total liabilities, but again, that's not going to be over our total assets, but something to be careful of. So when we look at our debt here, we see that Verizon's able to pay off their debts, whereas other telecoms such as AT&T are not. So this is, just by virtue of the mathematics, safer. Verizon has much less chance of having any kind of debt issues because they have the money to pay off these debts. So what's our bottom line here for Verizon? Who is Verizon for? Is it for you? Is it a good dividend investment? I would say that Verizon occupies two good spots when it comes to dividend investing. The first is if you're looking to diversify your dividend portfolio into a telecom. Verizon's probably your best bet. It's very large, it's very stable, it pays a good yield. You're going to get that yield pretty much barring an economic meltdown. That 4.5% is going to be safe. If you're one of those people who has a dividend portfolio that's mostly made up of energy or financials, like a lot of people do, let's say you're sitting on more than half your portfolio is in those things while the other half is split between 10 other sectors, very poorly weighted, Verizon could be a good source of income for you, a good way to diversify. Maybe you take 2, 3, 4% and shift it towards this. That's going to help diversify your income. That's our first use of Verizon. Our second use is going to be for dividend dividend growth investors, but not in the way you would think. Verizon is increasing their dividend, but not by a ton. It's only going up by about 2 or 3% a year, maybe 4% on the bigger years, but this isn't something where the dividend's growing 5 to 10, 15% a year. However, if you do have a portfolio looking for dividend growth and you want a good stabilizing factor in there, a large blue chip company that's still increasing their dividend to kind of hedge against some of your smaller or less stable dividend increasing companies, this could be a good stabilizing force for you. It'll be able to provide that stability, whereas if the others, maybe their dividend increases stop, or maybe their share prices tumble because of something, you can really rely on Verizon to get some stability into that portfolio. Aside from that, it's really just kind of a basic dividend stock. There's not a ton of movement. It's going to pay its yield. If you're just looking for income and you happen to be looking at a telecom, Verizon's probably a good choice for you. If you're just looking for a stable large cap, I mean, it's part of the Dow Industrials. You don't get much more stable than that, and it pays a nice dividend. So it could be for you if you're just looking for that as well. Thank you for watching.